Hey everybody, I'm Rob Freeman and welcome back to Insuring the Built Environment. Today we're answering the question, what is tax insurance and how can tax insurance help renewable energy project developers and investors reduce the risk of an unforeseen tax liability? Well, tax insurance is a special type of business liability insurance designed for business transactions. And it is designed really to increase the efficiency of business transactions by reducing unforeseen risks associated with potential tax liabilities. So if you're involved in a business transaction, you want to make sure that you can calculate what the tax liability will be. And this is where tax insurance comes in. Tax insurance is designed to reduce the risk by transferring that risk to an insurance company of an unforeseen tax liability as a result of a business transaction. And this would happen if the IRS or state or local tax authority decided that based on the characterization of that business transaction that you put forth, you actually owed a larger tax liability than what you had expected. And tax insurance can be used in many types of situations. It could be used with the solar investment tax credit or the wind production tax credit or the characterization of a REIT, or in an M&A transaction where you're purchasing a target company and that company you believe maybe has some incorrect tax characterizations that were historic that you don't want to incur on your balance sheet or your income statement as a result of the transaction. And so tax insurance has a lot of applications. It's also sometimes packaged alongside with or separately from what they call representations and warranties insurance. In a separate video, we talked about reps and warranties. And again, it's like reps and warranties in some ways, and it's designed to help make a business transaction more efficient where both parties want the deal to go forward, but they are in disagreement regarding the amount of risk that they want to incur with respect to either the buy side or the sell side of that transaction. So what does tax liability insurance cost? Well, tax insurance, also known as tax liability insurance, usually costs anywhere from 2 to 6% of the cost of the amount of coverage that you buy. And it is usually a one-time premium for a period, a policy term of up to 7 years. And so it is usually, you don't really find tax insurance for smaller deals. It's usually a minimum premium of around $100,000 for a tax insurance policy before a carrier will want to write that policy for you. So that's kind of it in a nutshell. Tax insurance is a special type of business insurance that will help in transactions where there's a taxable event where the taxpayer wants to reduce the risk of an unforeseen tax liability coming their way. And they can buy a tax insurance policy to do that for a specific transaction or for a specific type of treatment that they've chosen for a business deal. So that's it in a nutshell. If you have questions about tax insurance for a project or a business that you're working on, please feel free to schedule an appointment with me at the link below this video or just go to robfreeman.com. Thanks again for watching. I hope this is helpful and have a great day.